Hello, and welcome to myfinanceteacher.org. Let's have a lightning fast review of a range of markets. We're just going to have a look at price charts and cycle duration without spending too much time on the sentiment this time. Starting with the general stock market, S&P 500 is in the daily cycle that has been going on so far for 18 days. These cycles usually last for around a couple of months. The intermediate cycle is very old at 155 days. These cycles usually last for around half a year. So the usual duration of both the short-term daily cycle and intermediate cycle tell me that the S&P 500 is likely to correct significantly into the end of the intermediate cycle, perhaps over the next 1 or 2 months. We see that RSI is showing negative divergence, where price is giving us higher highs and RSI is giving us a lower high. That usually precedes some sort of a correction. Moving on to gold. Today gold is giving us a huge green candle. That 60% scenario is actually playing out. In my previous gold video, I mentioned that there is a 40% chance that the previous low in gold was the end of the intermediate cycle, but it was not very likely. The 60% chance scenario is actually playing out, where the intermediate cycle since March this year is still ongoing. And starting from March, the duration of over 150 days is much better for a duration of the intermediate cycle than the duration of only 113 days in that 40% chance scenario. Over the next few days, perhaps by the time this intermediate cycle in gold reaches somewhere around 160 days old, I think gold is going to finish the ongoing correction. Perhaps a dip below 1740 will create that blood on the streets where everybody is stopped out, which means there will be no more sellers left on the market and the price will be ready to go back up into the rally of the next intermediate cycle. So over the next few days, once I see the start of some green candles, what I might actually do is I might increase my allocation to precious metals, even though I'm pretty close to about a quarter of my portfolio, as I mentioned, in those precious metals. Next, moving on to crude oil. Actually, as you see, just a few days ago, I shared my views on crude oil and energy with the members at myfinanceteacher.org. As I mentioned to the members, crude oil did actually peak for the ongoing cycle over here in early July, and it's now going down into the intermediate cycle low. Usually these cycles on crude oil usually last for around half a year or so. The previous cycle actually lasted for a bit less than that, for 142 days. So perhaps anytime between the next 3 weeks to maybe another couple of months is when we're going to see that intermediate cycle low. Perhaps when crude oil comes close to retesting this 200-day moving average. That's when I will increase my allocation to energy substantially, although by now I already have, if memory serves well, perhaps something around 10% of my portfolio allocated to energy, where the maximum I want to allow myself to allocate to energy is perhaps somewhere close to a quarter of my portfolio. As I mentioned, I designate a quarter to precious metals, a quarter to energy, a quarter to cryptos, and a quarter to some other assets, including the general stock market. Moving on to natural gas, I've actually missed all of this wonderful rally in natural gas. But the ongoing cycle so far has been going on for 122 days, and although the previous couple of cycles were quite short, lasting for only about 3 months, usual duration of natural gas cycles is over 4 months, somewhere close to 4.5 months. So I still expect a correction into the cycle low on natural gas, perhaps over the next few weeks. And what I already see here is a negative divergence again between the price and RSI. That is not really a great sign for me, especially given that natural gas is poking quite a few times above a relatively wide Bollinger Bands. Some of the support zones for the likely upcoming correction would be somewhere around $3.3, $3.4. That's based on the couple of previous highs over here in February as well as in June. Moving on to copper, as I've mentioned a few times to the members at myfinanceteacher.org, the copper cycle is already 127 days old, and I don't really want to enter the cycle this late. The usual duration for these cycles is just over half a year, so let's say half a year. Within this cycle, copper actually topped very early, and it's been correcting all the way since May this year, which is quite normal given that before that, copper had given us an amazingly strong rally. So a longer, protracted, kind of a boring correction is actually good for another stronger push higher a little bit later. But for now, I'm still waiting for copper to perhaps retest the 200-day moving average by the end of this cycle in another few weeks. Let's have a look at wheat. Again, something that I've missed over here because the previous cycle only lasted for around 100 days, while usually, on average, over the last few years, these cycles lasted for around 4 months. So since I didn't have a chance to look at the charts every day, I missed this really interesting rally in wheat. And by now, the cycle is 28 days long. It's still pretty young, so I still expect some sort of a upward momentum in wheat. But the momentum is probably going to be a bit more gentle than it has been over the last couple of weeks. Actually, last time I was looking at wheat was over here when it was testing the 50-day moving average. And as I mentioned, I was pondering whether to get back in or not. Then I got busy a little bit without following the charts too much, and there's been a nice rally since then as well, which I haven't actually participated in. So what I expect is a gentle upward momentum over the next few weeks, perhaps until RSI gives us a negative divergence. So far, a higher high on price did actually come with a higher high on RSI, so there is no negative divergence over here, but another gentle higher high might actually come with a lower high on RSI if that move upwards is gentle enough. Of course, if move upwards is very strong, then RSI is going to poke higher as well. And as I mentioned, a negative divergence on RSI, perhaps over the next few weeks, will actually indicate that wheat is getting ready to go down into the cycle correction. And lastly, let's have a look at coffee. The coffee cycle is 123 days old. Usually these cycles last for just under 5 months, something around 4.5 months. That's the average over the last few years. Of course, sometimes these cycles are much shorter than usual. And I think coffee is still going to correct perhaps over another few weeks until RSI reaches some of the recent cycle low levels, at least as low as 38, before I might actually take a chance at catching the cycle low. That is all for now, but let me leave you with this question. What do you guys think of this kind of a blindingly fast overview of a range of markets? Let me know what you think in the comments below. Have a pleasant weekend and good luck in your trades.